Hey, welcome back to YT Finance, and today we are identifying the top 13 best long-term dividend stocks to buy now. For more videos just like this one, go and annihilate that like button right now. Comment your thoughts down below about your favorite dividend stocks. Subscribe if you are new, and without further ado, I say let's jump right into it. Now, as a disclaimer, these companies don't necessarily have high dividend yields. However, we've done the research and made sure that these companies are fundamentally solid and resilient to where not only the share price of these companies are going to be growing very rapidly, but also their dividends will be growing over the long term. That's why these are long-term dividend stocks, so eventually they can grow their dividend as time goes on. So you're going to be making passive income not only when the share price itself increases, but also obtaining passive income through a dividend, which is also increasing year over year. So with that being said, let's jump right into it. And we're going to start off with one of my favorite dividend stocks, which also gives me phenomenal growth, which is Cisco Corporation, ticker symbol SYY. Cisco Corporation is one of the leading wholesale food distributors in the United States, and they also operate internationally across the globe in areas such as Canada, the United Kingdom, as well as France. If you don't know much about this company is absolutely huge, and they have a plethora of resources at their disposal. On top of that, they have raised their annual dividend for 54 straight years in a row, and right now they're currently offering a dividend yield of 2.65%, which would equate to an annual dividend of $1.96 per share. This is a very good company to own, not only for long-term growth, but also for a dividend that will keep on giving and growing. Up next, we have Automatic Data Processing, ticker symbol ADP. This company currently offers a dividend yield of 2.34%, and they're one of the leading payroll companies in the United States, and they have raised their dividend for 48 straight years, which is phenomenal. Again, the companies on this list are not only fundamentally solid and resilient, but they are consistently increasing their dividend year over year the majority of the time. I also want to highlight regarding Automatic Data Processing that their sales increased by around 9% on a year-over-year basis to $4.4 billion. On top of that, their adjusted net earnings rose by approximately 17% year-over-year. Again, we see that this company is not only growing their overall financials in terms of revenue and earnings per share, they're also growing their overall dividend and their stock price. Professionals are currently forecasting that their earnings per share growth will average around 13.43% growth over the next 5 years. So if you're looking for long-term consistent passive income growth, this is going to be the company for you. In our number 11 spot, we have another phenomenal company that I personally own, and that is ASML Holdings N.V, ticker symbol ASML. This company offers a dividend yield of 1.55%, and although that seems small, the overall growth that you get from this company is phenomenal. Also, concerning companies that give a lower dividend yield below 3%, it means you're not going to be taxed very much on these companies because you're going to have to pay taxes on the passive income that comes into your account. But if you're earning the majority of the passive income through the shares actually increasing, that's what you really want to do, and that's the strong point of this particular company. This company is a semiconductor equipment company that is a leader in their respected industry, and right now, experts believe the future growth of this company is going to be amazing. Given the recent surge in demand regarding artificial intelligence, semiconductor demand has also positively been correlated with this, so the demand for semiconductors is increasing as AI adoption increases. On top of that, their earnings are expected to increase, and their revenues will also scale very nicely. So even though they only have a dividend yield of 1.55%, you're getting a growth in passive income from this company just in another way, which will decrease your overall taxes that you're going to have to pay regarding other passive income stocks. In the number 10 spot, we have Next Era Energy Inc., ticker symbol NEE. This company is a leader in the utility space, and they offer a strong dividend coming in at 2.52%. What makes this company phenomenal is that they have increased their overall dividend for 30 years in a row, making this company very stable, resilient, constant, and it's something you can bet on over the long term. I also want to make you aware that management, during their Q4 2022 earnings call, they said that they anticipate that they will increase their dividend at around 10% per year from now until 2024. So not only are you going to make money through the stock price increasing, but also they're going to grow their dividend at 10% per year. So you are guaranteed this growth in regards to the passive income in which their dividend will give you, making this a great company all around, very well rounded, and I personally own that company as well. Up next, we have another very blue chip company that I also own, which is Home Depot, ticker symbol HD. If you're not familiar with Home Depot, they are the largest home improvement retailer, and they've recently really benefited from the increase in the average home price. Although the home improvement market as a whole is expected to be relatively slow over the next few years given inflation, management anticipates long-term growth opportunity for this overall company. I also want to add that they give a dividend yield of 2.96%, one of the highest on our list, and they have increased that dividend yield for 14 straight years, and they anticipate to keep that streak going strong. Up next, we have Oracle Corporation, ticker symbol ORCL. And Oracle is a leading enterprise software company that currently offers their investors a dividend yield of 1.82%. This company has grown recently due to mergers and acquisitions, and there's also the potential for this company to merge and acquire TikTok if they're forced to sell to an American company. This would be absolutely huge. However, if TikTok ends up actually being banned completely, this would hurt that overall idea, but in general, this company is relatively solid, but not my favorite on this list compared to the other companies. Oracle is very strong overall, but the companies we have on this list are just top tier. Speaking of which, let's talk about Walmart Inc., ticker symbol WMT, and if you don't already have this company in your portfolio, what are you doing? This company is a phenomenal company. They offer a dividend yield of 1.63%, and they are a leading retailer, which has increased their annual dividend 51 years in a row, making this such a good company to have in your portfolio, not only for general growth, but honestly, it's just an amazing value. The company has brought in $611 billion worth of annual revenue, and they're currently offering their customers very competitive prices, giving them a huge competitive advantage in their overall market. They also have very strong overall profits, and they are really making huge improvements in regards to e-commerce. Their e-commerce business is currently growing, and it accounts for around 13% of global sales. They're actually taking some market share away from Amazon. That's how successful Walmart is being. So please always make sure to do your own research. Look further into Walmart, but honestly, it's one of my favorite companies on the stock market as of right now. Similarly to Home Depot, let's talk about another leading home improvement company, which would be Lowe's. And the reason why Lowe's, ticker symbol LOW, ticker name Low, is on this list is we want to take somewhat of a co-optation approach. If we buy Home Depot, we would also want to buy one of their competitors, which would be Lowe's. In a similar vein, even though this company I'm about to mention is not on this list, if we buy Walmart, we would also probably want to buy Target. I want to make investors aware that both Coke and Pepsi are not on this list. However, I own both Coke and Pepsi because I take that co-optation approach. I don't want to just bet on one market leader. I want to bet on at least two market leaders. So regardless about which one wins in the long term, both companies are going to pay me substantially. So let's talk about Lowe's. Like I said, they are another leader in the home improvement retailer space, and they have experienced some negative headwinds regarding the overall macroeconomic economy because high inflation has really hit their sales pretty hard. But that just makes it a better buying opportunity for long-term investors. However, this company is also benefiting from the rise of value of various home prices, just like Home Depot is. And honestly, the company offers a strong dividend coming in at 2.19%, so clearly look into this company further, or at minimum, put this phenomenal company on a watch list. Now we're going to start breaking into the top 5, and we're going to start off with none other than Johnson & Johnson. You can't have a dividend video without bringing up Johnson & Johnson, ticker symbol JNJ. This company offers a dividend yield of 2.99%, and they are a leading healthcare company, which currently gives their investors an annual dividend of $4.52 per share. Very impressive. This company is a dividend behemoth because they have increased their annual dividend for 61 years consecutively, making it one of the best dividend stocks to buy, period. So if you want passive income and you're investing into this company for the long term, meaning you're not going to sell it over the next 5 to 10 years, then please, if you are a dividend investor, make sure you have some exposure to Johnson & Johnson if it fits your investing strategy. In our number 4 spot, we have another favorite of mine, which is JP Morgan Chase & Co., ticker symbol JPM. This company offers a 3.15% dividend yield, and they are a leading bank. They are in our number 4 spot regarding the 13 best long-term dividend stocks to buy now because they are amazing. Although shares of JP Morgan Chase have been slumping lately due to the banking fiasco, bank runs, and overall volatility in the banking space, JP Morgan is literally the largest United States bank by assets, and it's likely going to benefit over the long term, especially as other financial institutions either go out of business or their depositors try to transfer to a more fundamentally solid company such as JP Morgan. So in the long term, this is going to work into JP Morgan's overall favor, thus increasing their share price, and again, they're offering you a phenomenal dividend, so why not add it to your portfolio? In our number 3 spot, and honestly, I would actually switch these, Bank of America, in my opinion, should be number 4, and JP Morgan should be number 3, but nonetheless, I own both of these companies because in our number 3 spot, we have Bank of America, ticker symbol BAC. The company offers a dividend yield of 3.18%, just edging out JP Morgan, which is why this company is higher up on this list, and they are the second largest U.S. bank by assets. So if interest rates don't rise much further, this company is going to receive a lot of demand and inflows from depositors in other banks. Just like we were talking about how this could be a catalyst for JP Morgan, this is also going to be a great catalyst for Bank of America. Investors are flooding to very fundamentally solid banking institutions which are not at risk of going out of business, and JP Morgan and Bank of America are two such financial institutions. So over the long term, I'm really excited to see what these companies could make of themselves. So even despite near-term stock market volatility, over the long term, these companies are very good. In our number 2 spot, this should be no surprise because you all know that my 1 and 2 in my dividend videos and my growth videos are going to be Apple and Microsoft. So coming in at number 2, we have Apple, ticker symbol AAPL, which currently offers a dividend yield of 0.58%. So why are they in our number 2 spot when they have one of the lowest dividend yields? Well, remember, we're talking about overall passive growth. We're not just talking about dividends. Apple is an amazing growth company that offers a very impressive dividend for the type of company that they are. They are a leading technology giant that makes iPhones, iPads, and personal computers, and they've grown substantially over the last few years, considering their high price premiums but strong consumer demand. Apple has returned more than $25 billion worth of value to shareholders, and $3.8 billion of that is going to be paid out in terms of dividends. So if you don't have this company on your list, what are you doing? And then lastly, we have Microsoft, and here's why Microsoft is the number 1 on this particular list. Microsoft Corporation, ticker symbol MSFT, is a software giant, and even though they only have a dividend yield of 1%, they are number 1 on our list, and here's why. They are a leading artificial intelligence company ever since they have heavily invested into OpenAI. They are incorporating artificial intelligence into their Bing search engine, and this gives them the opportunity to make their Microsoft 365 products even smarter. A boatload of businesses use Microsoft's products, and I anticipate that this will increase in the future, especially as they start to incorporate artificial intelligence in their overall products. So if you want phenomenal growth, stability, consistency, resiliency, passive income, and a decent dividend, then this is the company for you. Remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.